And we are live. Hello, everybody, and welcome back to another webinar from Treasury Masterminds. I'm very happy for today. We're talking about AI, finance, treasury, automation. Very popular topic. Given the number of registrants, more than 100 people joining us today, which is really amazing. Um, Let's talk about beyond automation, how AI is revolutionizing finance teams. We have two amazing speakers. We have Pablo and James, um, both experts on AI in their own way. I won't introduce them, they can do that themselves. Before we jump into it, some housekeeping. The webinar is 45 minutes. We won't be talking all the time. You have the opportunity to ask questions. Ask them from the beginning in the chat, put them in there. I will see them. We have time reserved at the end for these questions. If they are relevant, we'll ask them immediately to the speakers. I've seen some of you also send in the questions up front. I've incorporated some of them already in my questions, and the one that I didn't, please ask them again, or I will try to ask them. I've written them down. I'll try to ask them during the webinar. My name is Patrick Koens. I'm the founder of Treasury Masterminds. I will be moderating this session. I have the easy job of asking the questions. Now I'll quickly give the stage to Pablo. Can you quickly introduce yourself, 30 to 60 seconds, and then over to James, please.
Sure, Patrick. Thank you very much for the invitation to join the webinar. So my name is Pablo Leguina. I lead the operations team at Embat. We are a treasury management solution, and the operations team is responsible for supporting the clients from onboarding up to business as usual phase. Okay, so we are the team responsible for ensuring that our clients have an easy and a smooth introduction into Embat. I have been doing this for the last couple of years. Before that, all my prior experience was in finance. The earliest part of my career working for major European corporations in several industries across travel, retail, infrastructure services, and the most recent part of my career, I had been CFO of technology businesses, mainly part of venture capital or private equity portfolios. So yeah, this is a little bit about me, and I hand over to James to introduce himself.
Thank you.
Hi everyone. So I'm James Kelly. I've worked in Treasury for about 20 years. I've been Group Treasurer for 15 of those, and for the last 6 months, I've been working in a small company helping people use AI in Treasury. So got into AI in Treasury about 5 years ago, looking at using machine learning models in reconciliation and forecasting. Did a data science qualification, and then found that it was an awful lot easier to get other people on board once things like ChatGPT came along. So it's been a really interesting journey over the last few years, and it's super exciting because there's now an opportunity to solve a lot of the problems that have been difficult for a while using new tech. So hopefully we're going to talk a bit about that over the course of the next 45 minutes.
We will, James, and let's start immediately with asking you, James. We promised the audience real use cases, not only the fluff. How can I use AI? What are the most impactful use cases within treasury operations that you have seen?
So impactful is always a difficult word because it depends on where you are. But I think one of the key things is that with the technology available now, you don't have to follow exactly the same route that some of the groundbreaking companies, the Porsches and the Googles and the Apples did in kind of using AI in Treasury. So when you look at the kind of the real leaders, they built data lakes and all of that kind of thing. But there are accessible AI use cases that can make a big difference, both in terms of like the time spent on activities and also improving resilience. So at a very simple level, one of the key things that we see is challenge in a lot of teams is key man dependency. If one or two people leave, that can really set a department back for a long period. And so actually having things like policies and procedures, bots, like just sharing a lot of information with tools like Copilot, making that available to everyone so that even the most junior members of the team have access to the same level of information as the most senior. It frees the more senior members of the team and enables the more junior members. So it allows people to go much faster. Then you've got some great use cases around things like producing commentaries. So up until recently, you know, the process when it comes to importing bank statements and that kind of thing has been import bank statement, establish cash position, reconcile the position, then it will move on to someone else and they'll look at, you know, the forecast going forward. Someone else might look at actuals versus forecast. Someone might do a commentary, etc., etc. All of these are like different stages. Now with AI, you can effectively automate that whole suite as one exercise. So you can say, okay, right, here's what's in my forecast, here's what's in my actuals. Like I've imported the statement. And so when you get in the morning, you can have something on your dashboard that says, you know, here's your waterfall chart, here's where you were, and even start to get into, well, here are the recommendations about what you should do. So the more information that you share with the tools, the more that they can be helpful for you to increase speed and really kind of help you understand like the art of the possible. So that means that instead of spending time trying to work out what are your positions, you can spend time thinking about how do I optimize for this. And once you get into optimization, and I'll make this the last piece, but once you get into optimization, one of the pieces that, you know, a lot of treasuries have to follow satisficing strategies. You know, you can't give a treasury analyst the choice of, you know, well, just pick one from these 65 different scenarios. That, you know, you have to give them like 3 or 4 and go pick the best one from this. Like once you've got better technology, you're much more able to go just chuck all of the data in and then give me the output. And then that allows your team to really focus on like what are the opportunities and to think about how that might work.
Interesting. So it depends a bit on the priorities of your treasury where the most of your use cases are, really. But
completely. You know, you can pick anything up from, you know, data, FX management, processes. You know, there's kind of the use cases are everywhere effectively. So it's one of those things that if there's a treasury process, there's almost certainly an AI element that can enable it. So it's more about, you know, enabling you to do the things that you'd be doing anyway. Focus on where are the areas where you need the most help. But then also there's this magical piece where it allows you to unlock stuff that maybe you haven't been able to get to before because it's been too manual or too difficult. You know, I spent a long time when I started at Pearson, probably 18 months before I really got into the data. And I knew that I had loads and loads of data swimming around, but I also knew that I just didn't have the time to sit down and like try and work out what was useful, what wasn't useful, like where did I have gaps, all of that kind of stuff. So you can now do that really quickly using AI.
No, I agree. So Pablo, Embat is also using AI in your software. Again, real-world examples, that's what we promised the audience. How is Embat really helping finance teams, including the real-life examples, please?
Yeah, sure. So we at Embat, we have our own name for our AI solution. It's called Tell Me. You see it here in the screen. From the very beginning at Embat, we developed features in our solution to help teams automate stuff. You know, automate balance and transactions retrieving, automate transaction enrichment to categorize for cash flow purposes, both reporting and forecasting. Okay, now we are moving from automation to intelligence. No, we want to make sure that we don't only help teams automate, but that automation requires a less and less manual input from our users. And I will pick up 2 or 3 very practical use cases that we have been helping the clients with in recent times. Okay, the first one would be cash flow forecasting. Okay, when it comes to cash flow forecasting, well, many companies they rely on Excel. Those who may be a little bit more sophisticated and have actually a TMS where they can actually forecast their cash flows, sometimes they can be constrained by data silos. Okay, if the group, if we're talking about a big group like a client of ours, a major construction corporation with different locations, different geographies, accessing to data might not be that easy. Maybe your subsidiaries in other geographies, they don't share sales data with you. They don't share. Maybe they are late at uploading invoices. So for you, it's not very easy to have like a short-term cash flow forecast. 30 to 60 to 90 days, everything that you have already in your balance sheet. With the help of AI models building upon time series forecasting, which I'm not an expert on, but my data team is an expert on, and that is the cornerstone of AI cash flow forecasting. These time series models, we are able to help this construction business to have a 30, 60, 90-day cash flow forecast based on historic data. And not only based on historic data, but also factoring trends and seasonality, okay? Seasonality, it may be affecting any business, but also the trends of how cash flow has evolved in the most recent times, okay? And this will give you another tool to compare maybe to your already existing cash flow forecast that you put together using manual labor, if you allow me to use that expression. Okay, at the end of the day, what we need to gain the trust of the clients, of the users of our tool, of any AI tool. And at the beginning, it's probably sensible to keep like two forecasts running in parallel, see how the AI forecast compares to your traditional method of developing a cash flow forecast, and it's another way of for you to make a more informed decision making. So that will be one practical example. Another very practical example is around transaction and forecast enrichment. Okay, which also will help you producing your cash flows and producing your cash flows, historic cash flows reporting, cash flow reporting, but also cash flow forecasting. Okay, and sometimes when we start implementing our solution, one of the most arduous tasks or laborious tasks is creating all those automations that are going to help you categorize your transactions in order to produce a cash flow. And sometimes that is an activity that some of our clients, particularly if they have several thousand transactions per day or per week, they say, hey, how am I going to approach this? No? Okay. So with the help of AI, we can make that task less onerous. Okay, we can leverage past activity when it comes, or historic activity when it comes to categorizing transactions, and our artificial intelligence model will auto-generate those categorizations for you. Okay, so it will help you reduce the amount of manual labor involved in categorizing your transactions. And the last use case that I wanted to mention is around automating your accounting, your bank reconciliation process, or your bank or your accounting, the accounting of your bank transactions. No, this is another practical example where by analyzing your historical activity when it comes to reconciling bank transactions, we can auto-generate accounting proposals, either by matching those bank transactions to existing documents in your balance sheet, in your AR, or in your AP ledgers. Also proposing accounting suggestions against your general ledger. So yeah, in summary, I would say AR forecasting or cash flow forecasting, accounting and reconciliation, and transaction enrichment will be three use cases.
I think they all make very much sense to be using AI for. James, I would like to hear your opinion here. I hear Pablo say we're building a cash flow forecast based on actuals, And I can do that because I can categorize my actuals, and AI can do that with I'm charging a bit with the push on a button. That means I don't even need the data anymore, what you were talking about. What's your opinion here? Using previous data, because the AI is maybe smarter in recognizing patterns from the past and using that for forecast, instead of using the company's own data, which might be rubbish as well, in my opinion. Happy to hear your opinion here.
Yeah, so corporate cash flow forecasting can be quite challenging because it depends on the size of the organization, but larger organizations, particularly where you've got multiple divisions and multiple streams and you've got acquisitions and other things, there is a little bit of a challenge in using historics in that the business changes relatively frequently. And so using a kind of out of the box model can be difficult. You've then also got the challenge that actually for most companies, they haven't got to the point Embat have gone, which, Embat have got to the point where they're bringing data in, they're effectively, presumably, reconciling all of that data to the general ledger, which is part of the bank rec process anyway. So they're solid on every transaction historically, where it's been coded, who it's been coded to, etc., etc. So if you've got 100% coverage of your bank accounts or kind of all the meaningful bank accounts, then you're in a great start point. Now, that's kind of really important because actually for a lot of companies, they feel like they're a long way away from having the data to be able to produce a cash flow forecast, where actually they've got quite a lot of that relevant data. So that's a really good thing. I think there's kind of a couple of things. So one of the things that we look at is that for some companies, it makes sense to do a central cash forecast and then perhaps share it with the operating companies and say, what do you think of this? For some companies where they've got quite heavily decentralized models, an AI cash forecast will work really well in a stable business that's predictable and understandable. Where you've got big strategic overlays, that's where you need more manual intervention. And so I think the model where like your forecast is entirely 100% press a button and it does it for you, like the reality is there's always going to be a situation where the CFO says like, this year actually we're going to increase capex by 20%, or such and such is going to happen. But it can get you a long way down the line. And I think the use cases that Pablo's talked about are exactly some of those that we talk about. We also we look at kind of one or two other areas, like for example being able to bring in information into your forecast by email. So someone can just send an email, it automatically populates your forecast. Like these are all it's all kind of this trying to get to the same problem set of how do you take disparate data sources and then turn that into piece. I mean, I think that the way that Pablo's described it is a really good description of where things are. I think the key thing that you've got to watch out for is that the features that you model for have to be relevant for your business. So AI can produce all sorts of correlations. It doesn't necessarily mean that correlation is something that's meaningful for your business. So you've probably heard of the example of, there's a correlation between drownings and Nicolas Cage box office success. So if you were, a film studio mogul, I'm not sure that you'd be sitting there going, oh, there haven't been enough drownings this year. Mm-hmm. We can't have a Nicolas Cage film. So it's one of those things that it's always going to be, AI plus people. But what it does do is it frees so much time to be able to think about things. And actually, for most teams, and I think, again, Pablo put this really nicely, if you're in Excel or you're heavily manual, most of your time is actually going to be spent trying to work out what your position is, not necessarily thinking about how do I make the answer better. Because actually, generally, the reason why you want a forecast is you want to have advanced warning of anything that's negative and be able to do something about it, or be able to make the positives even better.
No, that makes sense. And it triggers me to one of the audience questions that were sent in during the registration. And it was really talking about, where do I start? Because often, and I as a treasury consultant sometimes get the question, which AI tool should I use? Which AI tool should I buy? And I often tell my clients, then you're asking the wrong questions. The question is really, where should I start? Which process is hurting me the most? And I think I'm hearing you both say that. Look at the processes that take too much time, manual labor, and start there. And often that's forecasting or reconciliation or transaction labeling. And it makes sense. But even then, there was an audience question on, where do I start? Where does my
So
implementation start?
I think there is a piece here that, like, and you'll probably have seen a lot of people talk about how people use, for example, the chat systems in a similar way to Google, and say they, how do I work out my cash position or something like that. Now, in a very simple system, that will kind of work. And for example, at a surface level with Embat's Tell Me, I think it's called Tell Me. Apologies if I got that wrong.
Yeah, no, that's it.
It will give that answer. But actually, if you're looking for anything deeper, a much better question to ask would be, tell me my cash positions, and then suggest to me 3 ways that I can optimize my cash position. You're then getting a much more meaningful and richer answer. And so I think there is a bit of a game about getting used to working with the tools. And one of the things that we do in our workshops is that we look at, getting people to use visual tools, so things like ideograms, audio tools, so that they get used to seeing in different ways the output of their prompt, and that better prompts lead to better results. It is one of those things, it is a little bit like having a member of your team. The more specific the information you give, the better the answer. So if you say, how do I get from one side of London to the other? The system has to guess, are you going by bike, by foot, by tube, by car? If you say, I want to get from one side of London to the other by bike, but provided it's going to take less than 20 minutes, otherwise then I'll take the underground, then suddenly you've provided a much better instruction, and it will give you a much more relevant answer, because it'll come back and say, I've looked at it. If you walk it, it's going to take you 40 minutes. Therefore, you need to take the underground. So it's about being a bit more specific. And so I think there is a point about teams using AI in kind of day-to-day lives and in day-to-day work, whether that's for meeting minutes, action summaries, all that kind of stuff, just so they get used to, okay, this is how I work with this. Because the reality is that these tools are going to be embedded in much the same way as Embat have done into other platforms that you're using. This is going to be a key part of the way that you interact with software going forward. And therefore, the more you can get used to the right way to use it, the better the results are going to be.
Yeah, interesting.
And if I can add something to that question of where do I start? In my experience, as in with any other type of technology project, okay, AI is no different. It's an enabler, it's a technology enabler, and you're gonna have to implement it like any other piece of technology. Like if you ever started when you implemented your ERP or when you implemented your TMS, it's just another piece of technology. Make sure that you have quality data. Okay, don't start. Because I mean, every treasury team, every finance team will have its own pain points. But if your data is not of quality, if you don't have like a strategy around collecting data, around governance, around how do you maintain that data, and when I talk about data, what I mean is accessing balance and transactions of all your bank account portfolio, making sure that your ledgers are clean when it comes to AR and AP. The moment you implement that AI model, it's going to be trained on data which is either incomplete or inaccurate. Okay, So it's gonna throw out inaccurate or incomplete responses. So for me, starting making sure that you have solid foundations around data is what every business, every finance team, every treasury team should start.
Yeah. On the positive side on that though, because effectively AI has leveraged from the data science industry, AI tools are very good at helping you clean and review your data. So if you're sitting there thinking, gosh, I've got loads of data, I know it's probably not very good, but I don't quite know where to start. So if I can't start with AI until I've got clean data, well, actually, you can use AI to do the prep stages of cleaning it and reviewing it and identifying where the gaps are, which again was something that probably wasn't available 5 years ago in the same way to kind of treasury teams. So it's a great tool, and you know, Microsoft are getting better at doing that through Copilot in Excel. People probably know that I'm a bit obsessive about Python, which is an amazing data science tool, and a lot of the chat GPT type systems, you know, whether it's Copilot or others, are getting reasonably good at doing that as standalone as well. So there's lots of tools out there that can help you make progress without you having to do it manually everywhere.
Yeah. Okay, I hear you saying, just to summarize a bit, start with the basics, start with the processes that are a lot of manual labor now, and automate that, and not in the automation like 5 years ago, machine learning, if then, but more advanced AI types of solutions, like some of the TMSs like Embat already offer, just to save you time and effort in manual errors and automation in that part. And that means that part is already covered. That saves you some time again, and you can use that time to further advance your treasury, which is the basic AI. I want to go deep dive now a bit more because that's reactive AI, the simple if-then automation bit. But let's go more into detail. Predictive analytics, AI that can really help me out, not telling the AI if transaction this, then label this. No, I want to see AI, hey, treasurer, I'm seeing a jump in my cash position. What's happening here? Or I already have an answer to this. It's a bit fantasy of the future, but how can we move from reactive analytics to predictive analytics? Pablo, if you can go first, because you're working probably on this, improving your AI all the time.
Yeah, sure. So at the end of the day, predictive analytics should help you make better informed decisions, no? By having a more reliable forecast, you are probably gonna be able to make better decisions around how do you allocate cash. And this is one of the areas that Embat and other TMSs in the market are helping companies make good use out of artificial intelligence. Okay, so if I can generate a cash flow forecast using artificial intelligence, what are the outputs of what do I get out of that cash flow forecast? Okay, one of the clear outputs is allocate your excess liquidity into the products that are more expensive in your bank portfolio. Okay, so that is a clear good use in terms of predictive analytics, ensuring that you optimize your liquidity. Also, predictive analytics around when is my client XYZ gonna pay me? Okay. When businesses are big, it's difficult to have like a clear grasp or clear grasp of collection patterns of all your clients. Okay, with artificial intelligence, before artificial intelligence, you could have DSOs, you could have DPOs. Now, obtaining data around the patterns of payment and collection, payment to your suppliers or collections of your clients, can factor more sophisticated variables like what I mentioned before around seasonality. okay? Maybe one of your clients pays you on time generally, but when it comes to the low season, because maybe it's a business in the tourism sector, it pays you later, okay? So that is something that with the help of artificial intelligence applied to AR forecasting, you're gonna be able to make more informed decisions, around maybe do I give credit to this client? Do I not give this credit to this client?
Oh, interesting.
Mhm.
There's an audience question about that. Can the model also explain how they come to this forecast? Can I drill down as treasurer, like, why do I see a jump in my cash position here? Probably because I have higher AR, but why? Why did the model predict this?
You can zoom in into basically the underlying factors that suggested that AR estimate. Yes, you can. We also give explanations around how the model is constructed. Okay. And it is something that also we can help the data team of Embat can help the clients understand why a certain prediction is made. Yes.
Okay, interesting. I want to build on that, and I want to ask you, James, because you're an AI expert, you know Python, you know coding, you're also a treasury expert. Many treasurers are not an AI expert. Do the future treasurers, maybe the analysts that are listening here, do they need data science, data analytics courses, or do they just need to call Pablo and talk to their data scientists? Where do we find this balance?
So I think it depends a little bit. So I think there needs to be a level of understanding, because for example, depending on the type of model that systems are using, the degree of explainability is variable. So for example, if you just went with a straight neural network model, then actually you wouldn't be able to see what the relative inputs were. You'd be able to see like what the features were, but you wouldn't necessarily be able to completely identify how the model was put together. So, it sounds as though Embat have chosen an explainable model, which again, there are lots of different models out there. A lot of companies, and again, this is something that we've tended to do, use sort of things like linear models or stochastic models, where you've got the variables that are visible, so that way at any point you can go, okay, well, this is what this is based on for this customer, and etc. etc. I think in terms of like the role in Treasury going forward, though, I think it does become a bit more high level, because you're spending less time collating data from different data sources and pulling it together. So you're moving kind of from being data analyst to kind of business leader. So then you need to kind of understand what are the drivers of behaviors. I think there's an element of needing to be a bit more commercial to understand actually what's going on in the business that drives the relative cash flows, etc. What you tend to find with these things as well is that the more plugged in you are, the better it is. To the point about if the key driver of your forecast is around receivables, then understanding where you've got disputes, where there are challenges, what lines of business are performing well, what lines of business are performing badly, that allows you to be really commercial and plugged in. Now, to the extent that data science can help with that, then that is useful. Now, I think in reality, I think the answer is that it's helpful for people to do a bit. I don't think you need to go off and like do a master's degree in data science in order to be able to progress, particularly because there's loads of maths in the stuff that we do in training anyway. But I think it is one of those things that I think it's helpful to understand how different models and different setups work, so that you can ask the right questions.
Exactly. Yeah, I fully agree. Pablo, is that something you can comment on? Do you teach your clients a bit about the data science and how the model works, so they do they need the basic data science knowledge, or at least data understanding? Would you teach them? Is there a learning curve involved? Yeah, what do you see in your implementations?
In my personal opinion, if you are a treasurer, you should be an expert in treasury, okay? And you should surround yourselves either internally in your own technology team, or externally with your TMS provider or your technology provider. You should surround yourself of experts around data science. I'm not an expert on data science. What I know is from what I have learned from my own data team, and I am an expert in implementing our tool and the AI functionalities that my tool or that our tool has, so it is good to know. It is good to know, to have the basics around the artificial intelligence, around models, around neuronal networks, like James mentioned. But I don't think it is an absolute must in order to have a successful implementation of an AI solution or an AI driven solution in your treasury team.
Especially if you buy a solution that has AI, you obviously help with the implementation, I would assume.
Yeah.
You're experts, okay. No, because I see the question from Peter, like, should we wait for the vendors to come up with AI solutions and use them? Should we build ourselves? And he even asked the question, like, is AI going to replace treasurers? Which is an interesting discussion. Is it buy or build, or eventually we don't need treasurers anymore? I have an opinion about that, but fair question to ask.
So I think it's one of those things that there's two different types of AI that are kind of in the space at the moment. You've got the traditional machine learning pieces, which is largely what Embat have enabled, with some generative AI over the top. And generative AI is a great accelerator in that space, which is brilliant, which is part of the reason why this really helps us. Generative AI can really help speed up process improvement and can help with things like commentaries, etc. However, you don't want generative AI in charge of deciding on your investment plans or your FX deals, because many of you have probably heard about things like hallucinations and things like that. The reality is, if you ask an AI model the same question 10 times, you won't get the same answer 10 times. Now, in a model where in reality in Treasury there often is a right answer and a wrong answer, what you don't want is a situation where, if you toss that dice 10 times, 9 times you get the right answer and 1 time you get a horrible answer. So for that reason, firstly, you're always going to want to have a human somewhere in the loop, just to make sure that you haven't ended up with that unfortunate answer. And the second thing is that what we tend to see, and I think this probably echoes a little bit the way that Embat have also enabled this, once you get to a pattern, say for example, you might use AI to determine which categories transactions should go in. But once you know that, for example, a transaction that begins, with code 121 or something is always going to be a bank fee, then you tend to move that to automation rather than keep asking AI. And you do that for two reasons. One is it's lower cost. The second is you've now got the right answer. You don't need to keep trying to guess what the right answer there is. So actually moving from a probabilistic to a deterministic model is the right thing there, because you're moving from something where you're trying to determine what the right outcome is into I know what the right outcome is, now I just need to keep delivering it. And so I think what we'll see is this kind of like step effect, where you use AI to help you move along, and then you use automation to help you take the step up, then you move along with AI, etc., etc. Because again, once you've done that AI categorization, like it's not every day that you're going to have to relook at all of your transactions. It's going to be a handful of those that you then go, okay, this one's new. What do I do with that? But that's where it saves you the time, because it's those 10 transactions that maybe previously someone would have had to go away and, you know, email someone and go, oh, what do you know what the right answer to this is? If you're able to go, oh, actually, we saw that transaction 3 years ago or something very similar to it, therefore it's almost certainly this category, that's where, you know, it comes in really helpful.
No, I like that stage approach, and it also makes sense. It's not that big of an implementation then, like your CFO asking the treasurer, hey, maybe you should use some AI, or go out there and automate everything that you can.
And I think that plays back to Peter's point, because actually what we're not talking about like a massive AI implementation where you've got to rip up all of your existing systems. This is like being given a calculator. Yeah, you're still doing the same calculations. It's not like, and I think this is one of the challenges that people have. And, you know, I think there's almost an expectation, like, what is it magically going to allow us to do that we haven't been able to do? It's not like, you know, we're sitting here as treasurers going, well, if only we could explore space, then, you know, the reality is the job is the job. We kind of know what needs to happen. So really what you're looking at is, this is a tool that allows you to do something more efficiently, more robustly, and accelerate. And therefore it's, where is it that accelerant makes the biggest difference? And sometimes the answer will be something that a vendor provides to you. And sometimes it'll be in an area where actually it's not covered by a vendor. You know, so at the moment, things like KYC, account opening forms, that kind of thing, aren't currently in scope for a lot of TMSs, but they can be in scope for AI, which can read the, you know, the PDF requests or the email requests. It can send out emails to people, or alternatively source it from a database that you've got, so that you can kind of self-serve on that. Now you can wait for a vendor to produce a tool, and, you know, that will come along at some point, or actually it's relatively quick to produce something using some of the tools that are out there.
Yeah, makes sense.
And if I may add to that point, and to what Peter was saying about replacing headcount, what we see is that treasury teams, many times, they don't act as treasury teams in terms of advising the business. They are more like chasing their tails in order just to produce data, to have access to balances, to have to produce a cash flow forecast that by the time it's finished and understood, it's out of date. So AI should be a tool that helps you be faster at doing those things, and hopefully being able to invest more time, or spend more time advising the business on what to do with that information.
Yep, no, I agree. It's an enabler. It's still a tool that helps you get there. The calculator, really, and the calculator hasn't replaced treasurers as well. You still need somebody to push the buttons on the calculator. I think that's the same on the AI. But maybe while we're here with you, Pablo, we already heard hallucinations, saying James. You've done a lot of implementations. I want to hear the bad stories now. What can go wrong? What did you see in implementations? Unexpected troubles, fails? Not only the fairy tales. Let's hear about it. What can go wrong? What can we expect?
Things that can go wrong in an implementation, including obviously AI solutions, is that, first of all, when the user, when the treasury team is not open to changing the way they behave, if you are considering implementing a new solution, then you have to be open to change the way you do things. You know, that's the nature of implementing a new solution. And we have seen that people, they want to have the best of both worlds. You know, carry on doing things the way I do, but at the same time having a solution that adapts to this way of operating, you know. And in my opinion, it is better to go with a ready-made solution, than customize and build it up. Because before we were talking about should I build it up or should I go for an external vendor? Well, unless you have unlimited technology resources, I presume that the priority of your tech team is not going to be build a treasury, unless you operate in the treasury sector and unless your business is in treasury, no? But brick and mortar businesses or construction businesses or retail businesses, their technology team normally is focused on delivering for the business itself, not for so go for ready-made solutions and adapt yourself and not be too stubborn on your existing processes. No, also, and I go back to the point around data. When you have data quality problems, it is going to be difficult that AI, unless you use AI to cleanse that data, like James was referring to. But you need to work on clean data, on reasonably clean data. We're not talking about perfect data. We're just talking about 80% clean data should be sufficient, okay? And also, when you aim too big at the beginning, in my opinion, start small and then scale, a little bit like what James was saying around, getting familiarized yourself with automation and then stepping up, getting familiarized with AI and stepping up, So what is the main pain that you've got in your day-to-day around Treasury? What are those tasks that you have to do manually every week? Think about those and think about how can you automate those with the help of artificial intelligence.
Yep. Perfect advice. That's what I hear as well a lot from a treasury consultant perspective. I always tell my clients, solve where your pain is, and don't expect a big bang implementation that suddenly your pain is gone by just throwing money at it, i.e. a solution. You need to be open to change and willing to do the work to get there. And that means changing your processes, doing things differently, hopefully in a better way. Thanks a lot. Quick question from the audience. James, do we all need to learn Python?
No, but it can be helpful. So it's one of those things that effectively, so Python is a really good way of producing repeatable processes. And so when it comes to things like, for example, going concern, viability reviews, things like where you're kind of regularly doing the same calculations, if you've got your kind of company-wide treasury model or your liquidity plans, that kind of stuff, actually you can produce models really quickly using Python, and the large language models are really very quick at producing that Python code. So again, a little bit like I was saying, it's helpful to have a little bit of an overview of what AI can do. It's helpful to have an overview of the art of the possible in Python, so that way you can ask for the type of things that you want. The reason why I quite like this is that if you haven't got a treasury system, and most people haven't, this isn't to say that most people haven't got a treasury system. This is that most people's treasury systems don't do things like long-term going concern liquidity planning and the scenario analysis around that. Then actually, that kind of thing is really helpful to be able to kind of go, okay, right, we can layer in M&A and all of that kind of stuff. And you can build a model pretty quickly because effectively, all the assumptions you can lay out, and you can create variables and that kind of stuff. And then again, you can use a large language model to create a guide for how to use that, so that if you've got colleagues who want to use it or auditors, then it's a really kind of transparent way of creating a model. And the nice thing is that Python is designed to be sort of, pretty close to natural language. So for example, if you've got a column that's called sales and a column that's called operating costs, and you want to calculate operating profit, then it's typically sales minus operating costs equals operating profit. Oh. So it's pretty easy to kind of to audit and to understand. And once it's built, you then don't have the kind of experience that you have with Excel, where you have to keep copying spreadsheets and all of that kind of thing. Effectively, you can just reuse that same functionality. So that effectively what you're doing is you're creating your own mini module that integrates data from different places, hopefully integrates data from your TMS and ERP and other bits to produce that.
Okay.
So yeah.
Yeah, indeed. Final question for you, Pablo, and maybe a short answer. We're already a bit over time. How do you see the future of AI in Treasury? Where does it go?
If I had a crystal ball with me, I would be able to give a precise answer. But what I see is AI giving back time to the teams. So what I was saying before, like making sure that you embrace the technology. It's not gonna help you resolve all your problems day one, but you should embrace it. You should start using it, and hopefully that will give you more time to add more value to the business, to be more like a trusted advisor to your CEO, to your CFO, in order to define your treasury strategy.
Yeah, no, I fully agree. I think these are amazing closing words. Thanks, Pablo. Thanks, James. Thanks, audience, for listening and actively participating in questions and discussions. Really fun to see such engagement. There will be a recording of this put on YouTube and Spotify. Thanks, Pablo. Thanks, James. I'll close the webinar here. I learned a lot. Thank you. Have a nice day.